Hey guys, Dave Keller here with Market Misbehavior. You have a number of stocks here recently, particularly some semiconductor names showing what's called an inverted head and shoulders pattern. Today we'll describe what that pattern is, why it suggests further upside for the semiconductor space. So the head and shoulders pattern is a classic price pattern, common in technical analysis. Really was popularized in the book Technical Analysis of Stock Trends by Edwards and Magee. One of my former analysts used to work with John Magee in the Boston area, actually Western Massachusetts, and used to do some work and had some great stories about how he would approach the market environment. Really looking at price patterns is the essence of his process. What we're going to do is look at the inverted head and shoulders pattern. We'll first start with the regular head and shoulders just so we can understand what that means, why it's an important price pattern, how you can use it to project a future high or low using a classic measurement technique. Before we get to that chart though, if you like this thinking about technical indicators, investor psychology, and behavioral finance, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Do you agree with a bullish assessment on semiconductors? Why or why not? Let me know in the comments below. So as we look at the charts, we're actually going to start with a chart of Microsoft. It's actually not really showing a great inverted head and shoulders. It's kind of like it, but I'm using Microsoft more to illustrate the second half of 21 and the beginning of 22, what's called a classic head and shoulders topping pattern. Now, just to orient you really quick to the chart, we have the daily open, high, low, close for the last 2 years, called a bar chart. We have the 50-day moving average in blue, the 200-day moving average in red, RSI, a great measure of price momentum here below the price, and at the bottom, the relative strength, how this stock is doing relative to its benchmark, or our benchmark, generally speaking, the S&P 500. We're not going to worry about any of those other indicators necessarily in this video. We're going to focus on the head and shoulders top, but I like to show things in relationship to the other indicators. You can start to think about how they're all related, because in reality, you never really, or at least I wouldn't advocate looking at any of these technical indicators in isolation. They don't happen in a vacuum. And my technical checklist when I'm evaluating a stock has about 7 steps, and I go through each of those items in the checklist. And so this pattern that we're talking about is just one of those pieces of evidence you want to gather as you're analyzing a particular price chart. So what does a head and shoulders top actually look like? Well, it starts with a price peak. So I'm going to take this guy and sort of show this, right? So this sort of price peak is the highest point on the chart over the last 2 years. Now, if you look to the left and look to the right, you can see we have some lower highs here and a lower high here. You can see how it kind of looks like a head and then a left shoulder and a right shoulder. So it's really described. Now, this is not an ideal pattern. It's going to have this other weird thing going here, but just for simplicity, we're just describing this as an overall head and shoulders pattern. Now, what do you do with the head and shoulders pattern? So first you identify by finding a high surrounded by 2 lower highs. You know, a peak, price peak surrounded by 2 lower peaks, and that's the head, the left shoulder, and the right shoulder. Now, the way you actually use the pattern is use what's called the neckline. And what that means is you take the low between the head and the left shoulder, that's this one here. You take the low between the head and the right shoulder, which is technically this one. You connect those two with the trend line. That is your neckline is what you call it. So think of like the head, the shoulders, here's the neckline, connecting the 2 interim lows. Now what happens is when you connect those lows is you have a level of support. When you break down through that level of support, that tells you that you want to measure, the pattern is now confirmed. It's a head and shoulders top, and you're technically most likely going to continue lower. Now, a lot of people actually just do a horizontal line like this. I don't have a huge problem with that. If you're a purist, if you really study Edwards and Magee, you really want to take the lows. The other option is to do it on a closing price, and then you don't have to worry about some of that as much. You're just looking at the closing prices, and that might be another way to do it too. I think a lot of that is more nuance, and I would encourage you to experiment with some of these techniques and see what kind of works for you. But I'm going to kind of stick to the pure view, which is this is the trend. These are the lows, and when we broke down through that neckline here in May, that confirmed sort of the distribution pattern. Now, what happens next? What you do is you take the height of that pattern, and I'm just using some different colored lines here. So we take the height of this pattern from here to here. Since I'm using a log scale chart, it's about 20.7%. We're going to look at where we broke the pattern here in May, and we'll take a same level, about 20.67% or so. That gives us a downside objective, we'll call it here, around there. And if you look, not too bad below where the price actually got to, right? We got really, really close to that downside objective. Now, depending on how you measure this, if you would measure it more, let's say like this, and you think of it more like a horizontal level, then this level all of a sudden becomes a little less, and all of a sudden this level probably looks really good because it's more right there, and all of a sudden we're really close to pinpointing the lows. But you get the general idea, right? The height of the pattern, basically you take the height of that pattern, we break the neckline, you project it. Oh, sorry, that's up here. I was going to say, I thought it was probably a better objective. So if you take that as a horizontal line, that would be your minimum downside objective. Lines up pretty well. And to be honest with you, Edwards and Magee really talked more about using the necklines. I tend to adjust that these days only because when they were designing these indicators, back in like the 1940s, 50s, and 60s, stocks traded on an eighth. It was much more likely that a price would hit an exact level of support or resistance and not go any further because there were only eight levels for each dollar at which a price could change, right? Every 12.5 cents. Now we're going sub pennies, which means we often over or undershoot levels. So some people are very much purists about how you have to use these patterns. I think there's wiggle room in a lot of technical analysis. I think if you if you think of it as too exact, I don't think that's the reality of what these techniques can be relied upon as the market structure has evolved. But that's certainly my opinion. So I probably look at it more like this way and think of the level. Consider these as a retest of that support level, and you can see how the measurement concept works. So hopefully that's a good illustration of Microsoft and how those levels all relate. Now let's look at the chart of NVIDIA. You can see it had a head and shoulders like pattern here, back here, similar to where Microsoft did, but not as ideal. And I think that's what you have to remember is none of these patterns are going to be, or many of them are not going to be ideal, right? And so we always talk about a confirmed head and shoulders top or a head and shoulders like pattern if it shows some similarities. But as close as it is to sort of that textbook ideal pattern, the better it's most likely going to come. Now, let's flip that over. And if you flip over that idea, you have what's called an inverted head and shoulders. It's actually called a Buddha bottom as well, but we'll go with inverted head and shoulders for today. We're going to make some annotations on the chart, again, highlighting this bottoming pattern. So again, I'll take these lows. So here we have the head, and then we have the higher low here and the higher low there. And there's our head, our left shoulder, our right shoulder. As we did before, we're going to take the trend line connecting these swing highs. So that's this, which is the high between the head and the left shoulder. This one is the high there, and you can see that lines up pretty well. And we have a pretty classic neckline. And usually in an inverted head and shoulders, the neckline usually slopes downwards. In a head and shoulders top, the neckline usually slopes upwards, kind of like what you see here. That's a little more classic of a pattern for a head and shoulders top. So same thing, we take this inverted head and shoulders. We have now broken the neckline in the last week. The question is, what's next for NVIDIA? So here's what we do. Again, we take a percent change tool like this. Basically take the low here to the high. It's about 76%. Or so, and let's take it again from the breakout level. That puts us about here, and that basically puts us back up to the highs here in November of 2021, right? It takes us to around 330. So again, the concept is however long this basing pattern, this bottoming pattern, however the height of this pattern, you project that from the breakout level. So just like you saw with Microsoft, that topping pattern and projection down to the lows ended up being pretty decent projection. Here we actually have an inverted head and shoulders pattern confirmed because we broke through the neckline. So important to note, you can't really consider this a confirmed pattern until you break up through the neckline. But once we got above 190 over the last week, that really confirmed a break above the neckline, and that, according to this technique, suggests upside back to retest the previous highs. Now, having said all of that, right, does this mean NVIDIA is going to retest previous highs? Based on this one technique, it definitely does. You have to remember a couple things. Number one, again, these things don't happen in a vacuum. This is one indicator among many. So while that gives me a potential minimum upside objective, I'm going to want to confirm how we go from point A, where we're at today, to point B, this potential move to 330, and think about the trend and the momentum and look at trendline analysis and other tools to maybe confirm or validate or disprove some of the projections that I'm seeing here. But for what it's worth, the breakout in semiconductors and the breakout to confirm these inverted head and shoulders patterns confirms decent amount of upside potentially in store for the semiconductor space. That is this video on the inverted head and shoulders pattern, which we're seeing on NVIDIA, some other semiconductor names. If you like this thinking about technical indicators and price patterns and behavioral investing, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Let me know in the comments below, do you agree with the bullish assessment for NVIDIA? What's your upside target? Do you think that's a failed breakout most likely? And what's your downside target? Let me know in the comments below. For Market Misbehavior, I'm Dave Keller. Be well, be safe. See you soon.